Welcome back. You're watching Bulls Charge Ahead. Today was the day when the Sensex conquered that 60,000 mark for the first time in more than 4 months. We're in conversation with Vikas Khemani, founder of Carnelian Capital Advisors, and Ajay Srivastava, CEO of Dimensions Corporate Finance. Vikas, we were trying to get in your view that, at these levels, if you have to deploy fresh money, incremental capital, which is the space which is attractive to you?
Yeah, I think, clearly I feel that there is a very strong earning momentum in a couple of sectors which is likely to, sort of sustain. One is banking and financial services. Very clearly, we are beginning to see reasonably good traction on the credit growth and margin expansion. So I think the whole banking and financial services pack should do well over next, 2 to 3 years, and more specifically in the immediate term as well, despite the recent run. Secondly, I think automobile again is a sector where it's coming out. It has not performed for last 5 years, almost 4 or 5 years, and I think once the chip shortage is getting over, volumes are going to pick up, and I think there's a good amount of buoyancy will remain out there. A good amount of earning growth is expected to show up. And lastly, I think industrials looks still very attractive in India. Investment cycle has just begun, and very strong indicators across the board on the demand front. And capex cycle, whenever it happens, it is never short-lived. It is long-lasting because they tend to be long-term and medium to long-term in the trend, and that is very robust. So I guess we will continue to see good earning growth out there as well. So of course, one has to always look at the stock specific, avoid pockets of overvaluations, but we see quite a lot of opportunity in this space. And I think from earning growth perspective, this year should be. I don't see major letdown in the earnings growth. We should be anywhere in the range of 15 to 18%, which is I think very decent growth for corporate India.
Okay, now Ajay, what is also very interesting is the profile of stocks moving up. I mean, the way Bajaj Finance is moving up, the way Lever has moved up, Asian Paints. It's a bit reminiscent of when the last rally started. Consumption was doing well, and those financing consumption were automatically doing well. Any thoughts on this? I mean, the way the Bajaj Finance or the Bajaj Group stocks have moved up, really stunning.
Well, you're right, Anuj. If you look at Bajaj Finance, is the typical share that when it goes for an excess, that's the problem when the problem starts for the market by and large, because it's already a very expensive stock. And this is the laggards who are either closing out short positions. That's the only answer I have, because there is no reason to buy the stock at these valuations. So possibly the answer lies in the fact that lots of shorts are getting closed out more than the longs are being bid. Having said that, Anuj, what is not visible on the index is the huge amount of buying which has taken place in the infrastructure space. Whether you look at the ABB, you look at the Siemens, you look at Bosch, you look at, as I said, power stocks, you look at that segment, which was almost always neglected by the investors. A lot of money has got diverted there. So while the attention is towards the Nifty stocks, I think there has been a lot of action on the rest of the market also. And anybody, and as I said, I cannot believe there is a buying case happening for either a Lever or a Bajaj Finance. I guess it is short covering. And that's been the good part of the market. And I think the positive part of the market for the last, not 1 year, 3 years, has been that the shorts always lose money in this market. For, good or bad, when the market fell down, the shorts were in a very low position. By the time they built up the position, the market has reversed. So whether the US or India, Anuj, today shorts are having a terrible time. And I guess is that what you're seeing today in Bajaj Finance is more a short covering than actual buying in the market.
Vikas, what's the biggest risk for the market according to you? And another question, unrelated, sectors like banks, NBFCs are already well owned, well discovered. It's pretty much a consensus overweight across investors that we speak to. Could you share some unique ideas, some anti-consensus buys for you?
So, while it is, I think, consensus, everybody sort of owns it. Banking is a very large sector. And I do believe that, if Indian growth story is coming about, you cannot not, bet on the banking sector. So that's the reason probably you find it consensus. And after long, we are seeing it picking up, once it was the stress and then stress came down, the credit growth has reasonably well picked up. So I think, clearly there's a case for it. Whole of last year, banking sector did not perform. So it's been a laggard in that sense. So I'm not overly worried about that. I mean, there are lots of banks we have seen recently. We added in our portfolio company called Aditya Birla Capital, which we think is in a middle of a transformation. Company has been delivering good quality numbers. It's trading at below one-time book. This quarterly earning, I think they reported about 30 or 35% sort of earning growth. No NPA issues, leadership transformation happening there. So many sort of changes are happening now. You can find lots of ideas within that. So whenever there is a sort of change happens, first money goes to typical obvious names, large cap names, and then the second stage you see where there is a sort of perception gap, or there is next level where the re-rating possibilities are there. So in these kind of markets, one can look at possibility of re-rating, but you should not buy only for the sake of it, but you should really have a case for that why this stock can get re-rated. So I think there are lots of such sort of stories, in my opinion, in markets, and which could do well. I personally think that there will be over next sort of 12 to 18 months. You will see a bit of a re-rating taking place in further re-rating taking place in banking. Of course, earning growth is also there, and that's what makes it sort of good risk reward. Banking per se, I don't think there's any sort of negative risk reward at this point in time as well.
Gentlemen, thanks a lot for joining us on this big day for the market, where the Sensex reclaimed 60,000 and the Nifty has moved within touching distance of 18,000. With that, it's a wrap on this edition of Bulls Charge Ahead. Thanks for watching.